Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today's January 6, 2013, and today I will go over two key crosses going into the day, and that's the dollar Singapore dollar and the dollar CAD. Now let's just start things off with the dollar CAD, currently on the 4-hour charts. And with this pair, we have been stuck in that ABC format going up, and it appears that move have finally ended. So now we had that wave 1, 2, 3, 4, and 5. And then now it appears that we have impulses going to the downside. So we have that 1 and 2 already completed. Now this appears to be a head and shoulder formation. I'm a little hesitant because the right shoulder is a tad bit higher than that left, but it's shaping up as one thus far, and we also see that this would be our neckline at this point. So a break below would then confirm that this could be indeed a head and shoulder formation. So we'll just wait for prices to break below this rising trend line, which we have pegged as the neckline, and then we'll look to enter this pair on a retest, and then we'll look to run it down some more. So now as we jump down on the 15-minute charts, I'll give you targets for this. So now, as on the 4-hour, we had this labeled as that 1, 2. Now we have the subwaves of that 1. So subwaves of the wave 3 to this cycle. You see we have that 1, 2, and wave 2 retraced 61.8%. So now we're looking for that wave 3. Now that wave 3 can range from between 100% of that wave 1 or 161.8% of that wave 1. So now we're betting on a 161.8% mark. So we're looking for 104.4, and that would be our target for this. So as stated, once it breaks below that rising trend line, or what we have pegged as the neckline, then what we will be looking for is 104.4. So we'll probably be looking to enter at about 106, 105.9, somewhere around that region. And then we're looking for that 104, so a little over 100 pips. Now I just want to shift the gears over towards the dollar Singapore dollar. Now the dollar Singapore dollar, this was a head and shoulder formation, and we did take advantage of that once it retested that neckline and also that rising trend line as well, which we have in place. So once both of that happened, we entered long at this mark, and we were looking for 127. Now prices is hovering around that mark, but it's resisting that 127 mark. So for you guys that are still in it, I would just look to flip on this position. So look to exit and then re-enter to the downside. And the reason being is that, as stated before, it's currently around that 61.8% mark. So it retraced 61.8% of that current move to the downside. And then price action has stalled at that mark. And also, as we drop down on the 15-minute charts, we see that we have waves A and C having a 1 to 1.618 relationship. And also we see that it reached just slightly off of that 1.618 mark. So good area to look to book profits, and then we'll look to enter the pair short again, and a good area to put stops would be at 1.272. So 1.272, and then we look for prices to push significantly lower. So with this one, we'll probably trail our stops by like 50, 60 pips, as this can move significantly lower. A break below this rising trend line would confirm further losses, and at that point we either look to add more towards that position, or we'll just let it run from that point, and then we'll come up with targets on this pair. That's the video for today. Any questions or comments regarding these two pairs or any other pairs, feel free to jump in the chat room. Paul or myself will gladly assist you with any questions or comments that may come up. You guys can also shoot us over an email, and we'll gladly respond to the emails as well. For you guys that are trading this week, enjoy your week trading, and good luck.